All right, you are welcome to another video, another tutorial video. So today we're looking at market cycle. All right, market cycle. So now straight up, now this is what you should know: market movement. Okay, market movement and market trend. Okay, so first you have to identify the trend that we are in, whether we are in an uptrend where price is creating higher highs, higher lows. Okay, then second, you have to identify if we are in a bearish trend, that is downtrend, the price is creating higher lows and lower lows. Okay, so once you've identified this, once you've identified the trend, you have to take note of market movement. Market movement in the sense of whether expansion or retracement. There are two types of market movement. One is expansion, two is retracement. All right. So once you've identified the trend, both bearish and bullish trend does expansion and retracement. Okay. So now expansion now. Let's use for a bullish scenario now. Expansion now is this: when market move from internal range to external range. Market move. This is an internal range. This is an internal range. This is an external range here. Internal range liquidity here. This is just an illustration. Okay, the liquidities the market came to seek inside of this range here. All right. So those liquidities are called internal range. So when market take those liquidities, it now targets the opposite liquidities, which are the external range liquidity. These ones here are internal range liquidity. Okay, so you have to identify whether we are in expansion or retracement. Expansion is when market moves from internal range liquidity to external range liquidity. Retracement means when market moves from external range liquidity towards internal range liquidity. Okay, you can see that market took out this external range liquidity here. Okay, it took it out, and what happened? It retraced back, it pulled back to take an internal range liquidity here. So this is a retracement. This is a retracement. This is a retracement. And for the fact that this is a bullish trend, retracement are bearish. Bearish movement. Retracement are bearish movement. While expansion are bullish, that is continuation. Do you get? Now the opposite applies for this bearish trend. And for bearish trend, the internal range are the higher lows, while the external range are the lower lows. Okay, these are internal range, these are external. Okay, I don't know if this is clear. So the market cycle is this. Market cycle is from what? Internal range to external range. Then from external range to what? Internal range again. This illustration explains expansion and retracement move. So once price takes out an internal range, it's going to target what? An external range. Once price takes an external range, that's why sometimes I said in my previous video that the best time when price takes, let me say for a bullish now, when price takes the higher high, it's not always best to keep buying. You wait for retracement, because the basic market structure says what? higher high, higher low, higher high, higher low. So and market just took another took out another higher high. You shouldn't be looking for buys. You should wait for retracement inside to continue. You understand? To create for market to create another higher low and continue higher high, higher low movement of price. You get? So I don't know if you understand this, but I think this is clear. This is clear. So what the assignments you have to do now for you to get a clear understanding of what I'm saying is this, to understand this. Once you open a chart, this is what you do first. One, then we'll take time to write this. One is identify the trend. Identify the trend. That is a bullish. Identify the trend. Identifying the trend is knowing whether we are bullish. Bullish or bearish. Once you identify the trend, you identify the phase that we are in. The phase in the sense that we are we in expansion phase, expansion, or we are in retracement. Now, why this is important is when you are in a bullish trend, you understand, and you are still buying when price is retracing, and the price has not taken out internal range. You understand? You are buying in a retracement move. You are likely going to get bumped. Okay. That's why sometimes you see that you are still following the trend, but you hit a sell. Market takes you out and still goes in your direction because the internal range has not been taken out yet. And the phase, you don't actually know the phase that market is currently playing out. All right. So once we open any chart, this is what we do, and this solves directional problem. When I realized this, I was amazed, like I was surprised. And my win rate has been crazy because I take note of this. This is what I take note of. This expansion, retracement, bullish, bearish. Okay, that's why sometimes you see my trade in a bullish movement, I'll be selling, I'll be shorting, and I'll hit TP, I'll hit my take profit. Alright? Because I understand expansion and retracement, the phase of the market. Now let's do some example. Let's go to the chart. Now this is synthetics. This is weekend. This is weekend. So we will be doing synthetics. Now look at this market. Now tell me, identify the trend for me. Let me add this before I go to the chart, so that when I'm saying it, it will be clear. Now for expansion, for retracement, listen. Let me ditch this candle. Okay, now for if you know, let's say price takes out for a bullish movement. Price takes out an external range. How do you know that price is about to retrace? That's an important and a vital question. Price has taken out an external range. Let me illustrate this thing very well. This is what price does. If there is no inducement here, price will come and engineer liquidity, and that liquidity becomes our internal range. All right, taps to a key level here and goes for the external range. All right, but on the higher time frame, you just see one leg, like the way I did it. I drew this thing before. You just see it like this, but when you look deep, there's an internal range here. All right, so price has taken out at this external range now. How do you know that price is going to start retracement phase? How do you know that price is about to retrace? That's what I'm going to illustrate now. That's our external range. This is our internal range liquidity, IRL. All right. So how do you know that price is about to retrace? Then this is where you take note of candle formation. They are very important. Now, when price sweeps the candle, let's say for a bullish movement now, this candle has this wick and this one. So another candle comes to sweep the high of that candle. Another candle comes. Takes out the high of the previous candle. This is a bullish movement. Take note of that. Sweep the high like this. Okay. You should start expecting, and if this thing should happen here, let's say this thing happened here, this is when the external range liquidity has been taken out. So, and this kind of start forming here. You also know that price is about to enter a retracement phase. And the same thing, the same thing also happens when price is about to start an expansion phase. You take note of the candle, the low will be taken, and price, keep coming up, going for the external range liquidity. I hope this is clear. So it's not necessarily like this, but when you see something like this, you know that yes, this is it. All right. Most times it doesn't display this type of candle. So if you don't see the candle on the daily time frame, you can likely see it on the weekly or 4 hours or other time frame. But the higher the time frame, the higher the probability. You get? I keep saying that. So that's why higher time frame is good. It's cool. Okay. Now, if you can remember what I said, when you open a chart, you identify trend and what phase. So identify the trend, you can see that this is a bullish trend. This is a very much bullish trend. Okay. Now let's follow the trend. The trend. Now this is the trend here. Let's start from here. This is week. They don't count. Okay. Week they don't count. Let me go to the line chart. You can see, but when you put on the candle chart, you can see that this candle swept the candle week. They swept this thing here, this higher low here. So this, you can see that we are very much bullish here. See, price is doing what? Is breaking structure to the up. You understand? So what do we expect? Price to keep doing this. All right. So now we have identified the trend. Now let's identify the cycle. The phase that we are in. phase that we are in. Now you see that when market took out this external range liquidity, what did you see then? Price did what? It retraced, it pulled back. I think that this candle doesn't have enough kind of chart to explain it. Alright, but let's see. Let's start from here so that you understand well. This is the trend. This is the trend. Yeah, see the higher high was taken out. Okay, so that is the external range. That's the external range. And price did what? It pulled back toward this internal range here. You know why this thing is not straight? What's happening now? This is an internal range liquidity. Alright. Then when you now combine with key level, you can see the price now tap from this this respected A-shaped key level and continue the up. You can see. Alright, so when you now combine internal range, the market side pusher, when you now combine everything with key level, then you go boss. So now this is another price has taken the internal range, and you see what do you observe here? Price what? Wait for the external range. It went for the external range. Alright, can you see that? Now, what can you see? Price will have what? Another internal range. Internal range can be one candle or multiple candles. Alright, so from here now, you can see that price pulled back to this internal. This is an internal range. Let's go. If you go to the lower time frame 4 hours, you'll see this. This is an internal range. Internal range. Okay. So what do you expect? You expect what? To buy. You expect this is a buy market. You expect to buy. Alright. You expect to buy. To take out this what? To come for this external range. Alright. Now quickly let me go show you guys the trade. How this thing played out on jump 75. Yeah, it was so swift. It gave me a lot of profit yesterday. Okay, this is it. You can see how. Let me just show you. This is a downtrend. You don't have anything buying, but I bought. Why? Because I understand. See, how many days has market been selling? Because what I understand the phase that we are in. I see the movement. This is like 3 days candle buy, and see where I entered from yesterday. Now, what I tell you about candle? When price is about to enter a retracement or an expansion move, see the type of candle it printed. Can you see that? When it took out the low. So these things are just there. They're not just random. You understand? So how did I even enter from here? Now let me combine this with key level. Then we end the video here. Now let me wipe the chart. Now this is on a daily time frame. Now I marked out what this candle. This candle. Now this is the high of that candle. So I'm expecting price to come here. But I was targeting somewhere above here on the lower time frame here, or somewhere here above this candle here, because of the liquidity that is there. That is the internal range that is there. Because this is a downtrend. Okay. So what pay attention to this thing now. What I did here, what I said is price should what give me entry here. Price should give me entry here before market takes this high. Because if market should go and take the high of this candle, which the low was taking, and start coming down, and I'm seeing an entry, I won't take it. The market is likely going to continue selling. It's going to be like a sweep. Takes out the sweep and do what, and keeps shorting down. But markets, I said if this market is going to buy, I should get an entry here that I will join and take out this high. Not market will just leave me and do what, and go and take the high and it might start going up or it will retrace. But once it takes the high first, I'm no longer concerned in this market. Alright. So market, I waited for an entry to join and take out the high. So let me mark out the high again. Alright, so let me go to the 4 hours. Sometimes I use the 8 hours and the rest. Now, one thing you should also take note is breakout structure. Now we are combining this thing with key level breakout structure. The candle has been swept. Alright. And there is a 4 hour breakout structure. Go to the line charts, you see that there is a breakout structure here. This is a breakout structure, signaling that is a potential reversal. So this is a downtrend. So this is another downtrend. So the phase that we are in is what a retracement phase. This is not expansion. This is a retracement. All right. So now I was targeting this. This is the internal range I was targeting. This is the internal range I was targeting. Okay, because this is the liquidity. How is it the liquidity? Liquidity, like all the, let's say for this market now, lower highs are what? Internal range. Lower lows are external range liquidity. Alright, so this is my internal. So what I expected was, since we are in a downtrend, the market should come and take out this internal range and go for the external range. You understand? Okay, but the market is still buying. Alright, so that's none of my business. I've taken my own part of the cake. Alright, so now we have identified where market is going, and that is cool. So what is left for us now is what, to join the ride. Okay, if we miss the ride, we look for another ride, we wait for another ride to keep going till we take out the liquidity that we are targeting. So, but this is my primary target here, because this was the high of yesterday. I think when market got to this place, I closed my position. When market took out the high of the previous day candle, I closed my position. But you can see market is still pumping hard to the upside. So I've identified my breakout structure. So how do I get in on this trade? I will not enter with key level, and this key level entry type is very effective. Okay, you guys can see my breakout structure here. I don't know why this is not straight. I'm not using my PC to record this. I'm using my iPad, so I can't really hold the shift key to make it straight. And okay, my magnet is on. Yeah, I see. Alright, so that's a breakout structure there. You can check the line charts to see that it's clear. Now, after the breakout structure, price retraced to this V-shaped key level here. So V-shaped key level watch my previous video on key levels where I explained the types of key levels and what they are used for. So V-shaped key levels are used for bikes, right? Until proven otherwise. Okay, A-shaped key levels are used for cells until proven otherwise. Proven otherwise in the sense that it can also be used as, let's say, for A-shape now until proven otherwise. A-shaped are used for what? Are used for cells. Proven otherwise means they can also be used for what? For bikes. Same applies to V-shaped key level. All right, so that's my key level. So key level, I also apply internal range to external range. I'll subject this internal range and external range to the key level to enter, because liquidity is what moves the market. All right, so now after I marked the listing, the key level, the V shape, I go into my 2 hours. I use 2 hours candle a lot. Only my 2 hours. And what price is there? Likely a miss entry, because from let me just explain everything from here. Price has already mitigated it on the higher time frame from the 4 hours. You see that price came to this key level here before even the break of structure. So, but I would like to engage after a break of structure. So what did I do? I waited for another entry. So this is where I got in. This is another V-shaped key level. This is another V-shaped key level here. This is another V-shaped key level here. Alright, so I waited for price to come to this place. Then I now look out for the internal range that is there. The range that is there. Now you can see what happened there. This is my primary and external range. It was taken out. So, and this is what a retracement. A retracement in the sense that price is coming from external range to what? Internal range. So price came to this internal range. This is my internal range. This one candle can be internal range. This is my inducement. Internal range. So, and once the internal range has been taken, the retracement phase is over. Then we now move toward expansion phase. Alright, so I have a V-shaped key level that is here. You can see it here. This is my internal range low. Let me remove this break of structure. Break of structure line that is here. So you can see how beautiful this is, even without going to a lower time frame. Let me go to the lower time frame so you can see that the internal range is actually you can see how clean it is. The internal range is not just one candle, there are multiple candles there. Go to 30 minutes or 15 minutes. Alright, so I pumped price from here and it was amazing. So where is my low? Instead of my stop loss here. So these were my targets. So this is like 5 RR, 5 almost 6 RR, 5.5, 5.4. Okay, so this is it. So subjects, you use your internal range, your trend, your phase on getting the direction. You also subject it in picking your entry. Okay, you also subject it in picking your entry. So that'll be all for this video. Okay, see you in the next.